Let's start the program with this week's inflation rate, which did come in higher than expected. For most economists, it was a last piece in the puzzle about what the Reserve Bank will do next with interest rates. From those economists, the picture is now clear. Rate rises must recommence. Edward Boyd starts our coverage.
Without further ado, please join me in welcoming the new Governor of the Reserve Bank of Australia, Michele Bullock.
On Tuesday, Reserve Bank Governor Michele Bullock spoke for the first time since being promoted to the new job. She was clearly determined to send a strong message about the RBA's willingness to fight inflation. Economists call it hawkish.
The board won't hesitate to raise the cash rate further if there's a material upward revision to the outlook for inflation. We're going to reconsider the outlook for the economy in the light of incoming information.
The problem was, the next day, inflation surprised to the upside, 5.4%. The market expected less. It prompted most economists to immediately change their economic forecasts. After previously saying the cash rate would be on hold in November, now almost everyone said the RBA will hike on Melbourne Cup Day. CBA wrote, CPI stronger than expected, RBA to hike the cash rate in November. ANZ said, RBA to hike in November, Q3 CPI too high to risk holding. And NAB was the strongest in their analysis, saying RBA to hike in November with risk of another.
Markets are pricing about 38 points of, if you like, so 1.5 rate rises. Our view would be it's more likely, unless inflation stays even higher than what we expect, that they'll do one and then sit there and watch. And probably what will happen is that you won't now see rate cuts until the back end of the year rather than the middle of the year. So higher for longer, if I can put it that way.
But one person didn't see it that way. Treasurer Jim Chalmers downplayed the stubbornly high inflation number. He said markets can be wrong, that he couldn't talk for the Reserve Bank, but we shouldn't assume rate rises.
It's really important to recognise that the annual inflation number that we have received today is in line with expectations. It's in line with the Treasury forecasts in the most recent budget, and it doesn't materially change. It doesn't change the Treasury's expectations for when inflation will return to the target band.
Chalmers, it was clear, was seeking to talk the market around. So how would Bullock react? The next morning, she fronted Senate estimates in Canberra and was asked multiple times about inflation. Every one of her answers was circumspect. Not that she would ever give too much away, but the inflation-fighting hawk from 2 days earlier now seemed more dovish.
The print came out a little higher than we'd been forecasting at our August statement on monetary policy, but it was pretty much where we thought it would come out, given the information we'd come into since then, particularly the monthly CPI indicator. So we thought it was going to be about where it came out. Inflation
is higher than the RBA's forecasts due to higher fuel prices and sticky services costs. But Bullock could not be drawn about whether rates will rise.
I'd say we're still analysing the numbers at the moment. I wouldn't like to say more or less likely. We're still looking at it. It has confirmed what we've been saying all along, as I said, that the persistence is in the services side and the goods side is responding, but I think that's all I'd say at this point. All I was trying to convey really was the same thing we've been conveying all along, which is the longer that inflation remains outside the target band, the more likely it is that inflation expectations might adjust to that.
After her Senate appearance, Bullock's old colleague, Lucy Ellis, the former head of economics at the RBA, emerged and said rates will need to rise. Ellis joined Westpac as a chief economist 3 weeks ago. Until this week, she's been silent on the direction of rates. So her research note is a critical signal from someone who knows the RBA and its Monetary Policy Board so intimately. Ellis wrote, having spelled out so clearly that a material surprise to the outlook would warrant a rate increase, she simply had to be equivocal to avoid front-running the board's decision, which is still more than a week away. An increase in November won't be the outcome the RBA had hoped for, but given the strength of their rhetoric around upside surprises, I don't think they will try to craft a rates-on-hold story. nor will they wait until the following month. On Thursday, the ASX rate tracker was pricing in a 55% chance of a rate increase next month. But on Friday, shifted down to 47% after Bullock's comments in the Senate. The key factor influencing rates is trimmed mean inflation. It remains elevated at 5.2%, too high for comfort, perhaps. Prices for petrol, rents, electricity, gas and takeaway food were all higher than the previous quarter. Some of those are expected to still be rising now.
What the Reserve Bank looks at is the trim mean. So they sort of trim away the bottom 15% of price falls, take away the top 15% and look at the average. Now, the Reserve Bank was expecting 0.9 in the quarter and they got 1.2. So you never know exactly what the Reserve's going to do, but they've said essentially that if they got a surprise on the upside on inflation, they would essentially react to it.
But as politics crashed into the monetary policy debate this week, Shadow Treasurer Angus Taylor was more direct.
Australians are feeling the pain from these price rises. So in the last quarter alone, a 1.2% increase. That's well above what it was in the previous quarter, 0.8, and well above expectations. And of course, that increases the probability of a Reserve Bank interest rate increase in the future.
The next RBA board meeting is on Melbourne Cup Day. This week's information makes it clear. The meeting is live. Rates could rise again.
Well, the wild card for our economy right now is the Aussie consumer and their spending resilience in the face of rising prices and interest rates. And already there are warning signs. Supermarket grocery basket sizes, they're lower. JB Hi-Fi's quarterly sales, they were down this week. Four-wheel drive accessories company ARB says its business is falling. But in the US in the past quarter, consumer spending drove its economy to a surprising high of 4.9%. And all this plays into the Reserve Bank's decisions.